Binance CEO CZ may take the whole crypto industry down soon. The recent moves of Binance CEO CZ have been concerning to say the least. CZ, whose real name is Changpeng Zhao, has built Binance into the world's largest cryptocurrency exchanges by market capitalization. But it's no secret that CZ has a little too much influence in the industry. Plainly put, the power he wields over the cryptocurrency world could be a potential recipe for disaster, and it may even lead to the downfall of the entire industry. In this video, we break down the reasons why. Lack of effective regulatory oversight. The Binance Exchange is one of the world's largest and most popular cryptocurrency exchanges in the world. While Binance offers a wide range of services and features that have made it a go-to platform for many traders, its lack of effective regulatory oversight could pose a serious threat to the long-term health of the cryptocurrency industry. One of the most important aspects of any financial system is the ability of the government and other regulatory bodies to ensure that all participants are operating according to the laws, regulations, and standards that govern the industry. Without these safeguards, it's difficult to ensure that the market remains fair and efficient, and that investors are protected from fraud or other malicious activities. Binance, as a decentralized exchange, does not have the same level of oversight as traditional financial institutions, which could put users at risk of being taken advantage of. In addition, the lack of regulation on Binance could lead to a lack of trust in the cryptocurrency industry as a whole. Investors who are used to the protection offered by traditional financial institutions may be hesitant to invest in cryptocurrency if they feel that there's no one to turn to in case of a problem. This could lead to decreased investment in the industry and a decrease in the value of cryptocurrencies. Finally, the lack of regulation on Binance could create an environment that's conducive to money laundering and other criminal activities. Without proper oversight, criminals could use the exchange to move large amounts of illegal funds without fear of being caught. This could give the industry a bad reputation and make it difficult for legitimate investors to use the platform. In summary, the lack of effective regulatory oversight on Binance could have serious implications for the long-term health of the crypto industry. Without the right safeguards in place, investors could be exposed to fraud, money laundering, and other criminal activities. This could lead to decreased trust in the industry, decreased investment, and a decrease in the value of cryptocurrencies. Increasingly centralized structure of Binance. The cryptocurrency industry is built on the premise of decentralization and trustlessness, which means that no central authority or individual has control or authority over the overall system. This is why the Binance Exchange's increasingly centralized structure could be potentially harmful to the cryptocurrency industry long term. With centralized exchanges, users are not in control of their own funds and have to trust the exchange to keep their funds safe. This lack of trustlessness makes them vulnerable to hacks, scams, and other malicious attacks. Additionally, more users' funds and transactions are kept in a centralized location, which can create a single point of failure where, if the exchange is compromised, all user funds could be lost. Centralization of exchanges can also create a few large gatekeepers who have the power to decide which projects and coins are listed, which can have a negative effect on the overall cryptocurrency industry by limiting access to new projects and coins. The cryptocurrency industry is predicated on being decentralized, and Binance's increasingly centralized structure could cause long-term harm to the industry. It's important that users stay vigilant and keep their funds secure, and that exchanges remain decentralized and trustless. The growing influence of Binance CEO CZ could potentially have negative effects on the cryptocurrency industry in the long term. CZ has a tremendous amount of influence in the cryptocurrency space, as his exchange has become a major player in the market. He's also a highly visible figure in the industry and often speaks on behalf of the cryptocurrency space in the media. The issue with this concentrated influence is that it can lead to a lack of diversity in the cryptocurrency space. CZ and Binance may become so influential that other exchanges and projects in the space are drowned out or overlooked. This could lead to a stagnation of innovation, as the industry becomes too focused on the projects and initiatives that CZ and Binance are driving. Furthermore, CZ's influence could lead to an overly centralized market, with the majority of trading and activity concentrated on Binance. This would create an unfair advantage for Binance, as well as weaken the overall health of the cryptocurrency industry. The growing influence of CZ is a double-edged sword, and it's important to be mindful of its potential negative effects on the long-term health of the cryptocurrency industry. By the way, my friends, while you're here, don't forget to subscribe and, of course, smash that thumbs up button and share the video with someone who you think will enjoy it. Also, please turn on notifications so you don't miss any of our finance-related videos. Possible consequences of CZ's influence on the crypto market. Loss of investor confidence in crypto. The cryptocurrency industry is highly volatile and subject to the whims of the market and the actions of the prominent players within it. Binance CEO CZ is one of the most influential people in the cryptocurrency community, and any actions he takes can have a significant impact on investor confidence. In particular, CZ's decisions regarding the listing of new coins and platforms on Binance have a huge impact on the market. When CZ adds a new coin to the exchange, investors tend to buy up the coin and its price often surges as a result. This can create a false expectation of future profits, which can cause investors to suffer losses if the coin's value subsequently drops. In addition, CZ's decisions to delist certain coins from Binance can also cause investor confidence to decline. This can be especially damaging if CZ delists a coin without providing clear reasons for doing so, as this can create uncertainty in the market and lead investors to question the viability of the coin. Finally, CZ's public comments and behavior can also have a major impact on investor confidence. If CZ makes controversial or inflammatory statements, for example, investors may be put off from investing in the crypto community. In addition, any appearance of impropriety or unethical behavior from CZ could also lead to a loss of investor confidence. Increased volatility. One of the first ways CZ could cause increased volatility in the cryptocurrency community is by making controversial statements or announcements. These could range from announcing plans to launch a new coin, to speculating on the future of the market, or even making baseless accusations against other actors in the cryptocurrency space. These actions could cause a huge reaction in the market, with traders panically buying and selling different coins in anticipation of the news. Another way CZ could cause increased volatility is by making ill-advised investments. If CZ were to suddenly invest large amounts of money into a cryptocurrency without doing any due diligence, this could cause a huge spike in the price of the coin. This could be followed by a crash as the market realizes the investment was made without proper research. CZ could cause increased volatility by making sudden changes to the Binance platform. This could include changing fees or introducing new trading pairs, which could cause a huge reaction in the market. CZ has a lot of power over the cryptocurrency market, and any wrong decisions he makes could cause a huge reaction in the market, resulting in increased volatility. As such, it's important for CZ to think carefully about any decisions he makes, and be aware of the potential consequences. Potential for market manipulation. Though CZ's influence has been mostly positive and beneficial for the market, there's potential for it to be used for market manipulation. CZ holds a large portion of Binance coin, and he can use this to his advantage in order to manipulate the market. He can use his influence to artificially inflate the price of Binance coin, thus making it more attractive to potential investors. He can also use his influence to drive the price of other cryptocurrencies down by announcing his opinion that they're overvalued, thus creating a sell-off. Furthermore, CZ can use his influence to attract the attention of investors and encourage them to invest in cryptocurrencies that are listed on Binance. This can artificially increase the demand for certain cryptocurrencies, which can lead to a false sense of security and encourage investors to invest more in those currencies. This can then cause the price of the chosen cryptocurrency to skyrocket, creating a bubble that will eventually burst and cause massive losses for investors. Though CZ's influence has been mostly positive, his ability to influence the crypto market can be used to manipulate prices and create bubbles. This can have devastating effects on investors who are unaware of the potential risks. And thus, it's important to be aware of the potential for market manipulation when investing in cryptocurrencies. Recommendations for crypto investors. Research potential investments thoroughly. Researching potential investments thoroughly on the Binance exchange is an important part of investing that can outproduce risk and increase returns. To do this, investors should take the time to research the asset they're considering investing in. This includes researching the underlying fundamentals of the asset, such as its historical performance, current market conditions, and potential future growth. Investors should also research any news or events that might affect the asset's price. Once the investors decided on their asset, they should examine the Binance exchange to see the available trading pairs and determine the best way to buy the asset. This includes looking at the exchange's fees, liquidity, and order types to ensure they get the best possible price. To reduce the risk to nearly zero, investors should diversify their portfolio by investing in multiple assets. This reduces the impact of any one asset's performance on the overall portfolio. Additionally, investors should limit their exposure to any one asset by setting stop-loss orders to limit losses and take profit orders to lock in profits. This can help mitigate risk by limiting losses and capturing gains. Finally, investors should stay informed by monitoring their portfolios and staying up to date on news and events that may affect the price of their assets. This includes regularly reviewing their portfolio performance, monitoring market news, and staying abreast of any new developments that may affect their investments. By following these steps, investors can research potential investments thoroughly on the Binance exchange and reduce their risk to nearly zero. By doing their research and properly managing their exposure to risk, investors can maximize their potential returns while reducing potential losses. Diversify crypto portfolios. Crypto portfolio diversification is one of the most important strategies for ensuring the safety of your investments. By diversifying your crypto portfolio on the Binance exchange, you can reduce the risk of loss to nearly zero. The Binance exchange offers a wide variety of digital assets and allows users to buy and sell multiple cryptocurrencies. This allows investors to spread their risks across different assets. By investing in different asset classes, you can reduce the risk of loss if one specific asset class performs poorly. For example, if Bitcoin falls, the other assets in your portfolio may rise, reducing the overall impact of that loss. In addition to diversifying your portfolio, the Binance exchange also offers a variety of trading tools and strategies. These tools allow investors to manage their risk and maximize returns. For example, users can set orders to buy and sell assets at predetermined levels. This prevents investors from getting caught up in market volatility and ensures that they only buy or sell when the price is right. Finally, the Binance exchange offers a variety of security measures to protect users' funds. These measures include two-factor authentication, cold storage, and funds protection. These features ensure that users' funds remain safe and secure at all times. By diversifying your crypto portfolio on the Binance exchange and using the trading tools and security measures available, you can reduce your risk of loss to nearly zero. This allows you to invest with confidence, knowing that your funds are secure and your investment has been diversified. Remain cautious of CZ's decisions. Remaining cautious of CZ's decisions on the Binance exchange is a wise strategy to help eliminate the risk of loss to nearly zero. As such, CZ's decisions can have a huge impact on the projects listed on the exchange, as well as the prices of the coins and tokens listed there. Therefore, it's important to remain cautious of CZ's decisions and understand the potential impacts they can have before making any trading decisions. One way to remain cautious of CZ's decisions is to stay informed about the current events related to Binance. By following news sources, cryptocurrency communities, and CZ's own Twitter account, traders can get an idea of what decisions he's making and the potential impact they can have. Additionally, traders can pay attention to the projects listed on the exchange. If a project's been listed by CZ, it's likely to have potential for growth and gain value, making it a good investment opportunity. Another way to remain cautious of CZ's decisions is to only trade coins and tokens listed on Binance with proper research. By researching each project listed on Binance, traders can gain a better understanding of the potential risks and rewards associated with each investment. Additionally, traders should be aware of the trading fees on Binance and other exchanges, as these can have a significant impact on the overall profitability of a trade. By diversifying, traders can reduce the risk of loss and help ensure they benefit from any potential gains. So, as you can see, remaining cautious of CZ's decisions on the Binance exchange is essential to help eliminate the risk of loss to nearly zero. By staying informed, researching investments, and diversifying, traders can make smart trading decisions and reduce their risk of loss. That's all from today's video. We hope that you enjoyed the content. If there's anything that you would like to add in, then make sure to comment it down below. We'd be more than pleased to read your thoughts. See you in the next video. Till then, bye!